This is supply and this is demand, and these are the only points market makers validate, including this point that will make your zones 3 times more accurate. Market makers supply and demand, one of the most fundamental skills to understand in trading. Even the newbies are talking about it. There's a good reason about that, because of how well they work. So it's better we make a video that show you how to do it the right way. I am going to show you how to draw market maker zones correctly, what to look for, how to enter, how to exit, and of course some tricks and hacks of how I improved the performance of these supply and demand zones, all for free. That way you won't waste your time on hundreds of videos that won't work. Enough with this. Let's now dive right into the value. So what is supply and what is demand? Supply is an area where price had an aggressive selling, and demand is an area where price had an aggressive buying. Supply is the same as going down, and demand is the same as going up. Let's start on where to draw these zones correctly, and I'll give you a little secret to make them more accurate. So there are many ways to draw these zones. Everyone has their way, but market makers do it this way. Market makers are elites and only place orders when the time is right. There should be enough orders to counter so their transactions can be filled. This means the process always starts with accumulation. You are probably asking yourself, what is that and how can you see it on the charts? Don't worry, as I will show you a technique on how to see this without any subjectivity. Alright, accumulation is basically a phase where traders are confused to buy or sell. This produces a consolidating price action where there is no trend at all, only ups and downs. So here's a trick to see accumulation. But before, have you ever tried our training program, the 7-figure traders program, which allows you to learn the institutional market maker method with 3 times a week live direct coaching? So click the link in the description now and start right away. Alright, back to the video. So the cleanest definition of accumulation is a phase of consolidation. A day, a week, or a month of consolidation is a sign of accumulation. Wait, you need period separators to see this clearly. If we apply these on our charts, 1 hour time frame segments days, 4 hour time frame segments weeks, and daily time frame segments month. So is this necessary to help us find the market makers' supply and demand? Stick with me for a moment. When the opening price of a day or week, month is equal to the closing price of that phase, we have just found ourselves a period of consolidation, aka accumulation. Here's the trick you have been waiting for. The highest and lowest points of accumulation phases are the market makers' supply and demand, and they only enter at these particular prices. When price moves to the high of an accumulation phase, we find signals to sell. When price moves to the low of an accumulation phase, we find signals to buy. Let's do a simple example on supply, and then we'll go over to the secret trick to make these zones much more accurate. Here we had a month of consolidation on gold, seen with opening price of June almost equal to the closing price. In the following month, price rose right back to the high of the accumulation. Entry made on the H1 timeframe, set your stop loss above the zone and a take profit at 50% of the previous accumulation, and we had a great trade. Now it's time for the secret tricks that will definitely and significantly improve your supply and demand zone. You want price to slowly move towards your zone. For example, after drawing the demand zone, you want price to come back slowly and chop it to your zone. The slower and more steady, the better. We do not want price to move like this in a very fast and aggressive way. If you want more trading tips like this, join our free Telegram channel. I'll leave the link in the description box below. On that note, thank you, and I'll see you in the next one.